Good morning, good afternoon, good evening, guys. Today is another video talking about our Sharesies challenge, and this will be the 13th episode, and we'll be updating our Triple M stock holding based on our subscriber growth in the channel. So in our last video, we were at 177 subscribers, and now we're at 182. So we'll be updating that right away, and we'll be adding $5 per the extra 5 subscribers we've got, and easy peasy. As long as I remember my password. There we go. So yeah, we'll be putting pretty much until I can keep it up $1 per subscriber into Triple M, and that'll be our challenge pretty much going forward in the years to come. And we've been doing that for about a year and a half now, and we originally started with like a global water fund, but decided to change to a dividend growth company and chose Triple M. And yeah, so in our last video, as you can see here, we were talking about company earnings and just overviewing lots of the companies that we owned and the ones that got released around that time. And between then and now, which is only a week ago, there was another like 8 companies that released earnings, and one of them was of course Triple M, our subscriber stock. So yeah, they released great earnings with sales increasing 9.6% since last year on year. And their organic local currency sales increasing 8% year on year, and you can see the cash flow was up 49%, and yeah, those are all great numbers. So that's great to see as well. And then we'll go to look at Colgate, and their earnings were great as well, all beating expectations. Only slightly though for Colgate. Their revenue was up 6% year on year on that basis, and yeah. So their price to earning ratio is currently about 26. Apple absolutely smashed out of the park, beating earnings per share by 41 cents, which was about 40%, and their revenue was up 12.3 billion above. So yeah, I think expected was about 77, and they hit 89.6, which is insane. And they also increased their dividend by 7%, I think. Which is great to see, as Apple is our, I think, 3rd or 4th biggest holding. And so yeah, that's looking great. Visa also earnings beating earnings per share by 11 cents, and Gap of 10 cents. And their revenue growth was negative, but beating expectations still. So that'll be because of the corona. So that's still doing fine though. Based on those expectations, just comparing it to that essentially. Same with McDonald's, having a lot more growth than I thought it would, considering everything that's been going on. So they're still up 8.7% year on year. So yeah, they're in a quite good spot compared to expectations. And MasterCard, similar to Visa, doing a bit better off, up 5% year on year and beating expectations. And their Gap earnings were also great. And then last but not least that I could find of the companies that we owned, Realty Income beating expectations by 12 cents to 86, and their revenue has grown 6.9% year on year, beating expectations by 27 million, which is not bad. And I had a wee note here saying that they've invested about 1 billion in properties and properties under development, about 403 million in the UK property industry. So those were cool numbers to see, essentially. And if you want to catch up on earnings on Pepsi, Coca-Cola, Johnson & Johnson, Procter & Gamble, and Tesla, and just a wee portfolio look at, go check out the last video. Just looking at all the numbers. You can search them online. It's pretty easy. Seeing how our portfolio is kind of comparing to expectations. So since last week, we haven't really put any more money into the portfolio. I think we're waiting until next week, just having a break for this week, as I bought another camera lens for this camera. I'm trying to broaden my kind of shots that I take from just landscapes to maybe some more astro, some more portrait, and trying to upskill, getting some filters, like some neutral density filters, a polarizer, UV filter, and just trying to really get into the craft essentially. So the portfolio is still up around 20% and still sitting around that same area up there. I'm seeing great growth really. In the portfolio, each stock is pretty much in the same position as you would have last seen it, but I'll give it a quick wee scroll. AT&T is going great, so with Coca-Cola, Hallenstein's, S&P 500's great. And I think main freight recently has had a bit of a bump there, which is sick. We'll have to catch up on the news there soon. And same with McDonald's, really, with those earnings. And yeah, I think our top 10 fund has also been going pretty well. It was about 3% up when I last remembered, so now it's up 8 to 9, which is sweet. Somerset's had a wee bounce around there, which has gone up and down, so we're sitting around 40% gains there, and then everything else pretty much the same. Westpac had a wee bump as well. There's expectations that lots of those banks are going to be paying high dividends soon, returning back to pre-Rona dividends, which will be really exciting for me because I put in that money before lots of the returns, so that's why it's up 55%. Took it out of the bank account in Westpac, put it into the Westpac stock to get a better return on dividend to the interest rate, which is after the dividends drop. So if the dividend doubles or triples to whatever it was before, that'll just be an insane return on investment, which is actually quite cool. So yeah, we'll get on to the main part of the video, which is a part of our challenge, and that is talking about the amount of dividends we receive each month. So as you can see here, it was really high because of Hallenstein's at $40.55, bringing our average up quite a bit from $6.32 a month over the whole time to about $7.64. So that's a huge jump. That's like 20% almost. Then total dividends received almost passing $200. So we're looking sweet. So we'll scroll down to see the makeup of April, and that is all the April ones with Pepsi and everything in there. And our last one being Realty Income Corp coming down near the end, and Hallenstein's being that big $29.50 after tax and all that. So that is sweet, sitting there in a comfortable spot. Yeah, so comparing to the other months, it's bigger than pretty much everyone apart from December, end of last year, which is pretty sweet. And yeah, seeing that average slowly get bigger and bigger and bigger and bigger is actually great. And you can kind of see a bit of the snowball effect as it sits around $1 and then just quickly increases quite fast. And some of that, if not all of it, will be due to increased deposits, and same with the dividends here and here and here. And yeah, but I hope some of it is that snowball. I haven't yet put in the numbers to compare compounding annual growth rates and stuff. I've seen multiple people doing something where they compare the growth rate of the dividends and stuff, which I might start doing to get a hold on it, but I might not have the data available because you might need to have the data available at the present time and stuff. It might be a bit of number crunching to get there, but I'll certainly try because it's quite a cool stat to have. Yeah, so we'll include our $40.55 for the month of April. And we see instantly that quarter two is just bang above quarter 2-3 last year, as expected. My guess was $36, I believe, for the month, and I instantly knew that was wrong as I looked through the Sharesies overview last time. And so Trish, my girlfriend, won the guess of guessing $40 on the dot there, which is not a bad guess. If I could have re-guessed, I probably would have guessed 42, so she still would have beat me there. And that's just because tax is sometimes a bit higher, so it's quite hard to estimate. Yeah, but I think I just updated this today as well, so we've invested in total about 10.3. I didn't actually upgrade this number, so we're up, I believe, more than 24%, including Hatch. I think it'll be more like 27 or something higher, so that's quite cool. Our total dividends is getting in a really good place. We're under halfway through the year, and we're at about halfway of the dividends of the year before. So including all those dividend raises and the money we've been putting in, June and December should be pretty huge. Considering June last year was 16.3, we should be seeing at least that. We should be seeing above 20, I would say. And then December being 55 there, we should be seeing, I don't know, I have no idea how to guess it because it's like Hallenstein's and all that, but I'll go with like 70 or something. So the ballpark range for this, I'm hoping hits 200 at least. I think our goal was 222, getting that symmetry going. Yeah, so leave your guess for May in the comment section, and I'll be sure to actually give it an estimate now. What do I think May was going to be? So May has been historically quite a small one, but we do now have monthly companies. I I think actually just Realty Income Corp and the bond fund, but lots of the US companies pay in May, I think. So I don't really have a real range of the guess. It's under $10 definitely. If it's more than that, there's something I'm missing, but I'll go with a guess of $4.44. Getting that symmetry, double the 222. I'll go with 444. And yeah, so if you want to beat me and get a channel shout out, if you've got a channel, leave a comment in the description, in the comment section. And if you beat me, actually, if you just beat everyone else, if there is others, yeah, I'll give you a channel shout out. I'll check out your channel if you've got one. And yeah. And I think that's all I had today to talk about. Just dividends, getting through, upgrading our Triple M holding, giving the Sharesies portfolio a wee overview. And yeah, so the coming videos will, I'll cross that one off in this video. I might be talking about how to budget and how to make one. But this one's not too important to me because I kind of internally sort that out and don't really have a process for it. It's kind of pretty random, really. But we'll definitely be making more videos in the future. We'll be updating on our camera trip, our camera journey rather. I'll definitely be showing you guys my website progress. So yeah, I've been in the middle of making a website for my photography. It's been quite fun. Trying to figure it out really, because I've gone through like Squarespace, Webflow, Card, all the like top options, and just gone through them and looked at them. And at the moment I'm mucking around on Google Sites because it's free and it's easy. It's easy, but also not easy because it lacks a lot of just basic features that are handy, and it's quite niggly. But yeah, in the next video probably I'll show you my wee draft of it so far, and yeah, just keep you guys intrigued on my progress in life and what I'm doing. Yeah, but that's it for today, and I'll leave it there. Happy investing, leave your guess, and I'll see you next time. Peace.